Good day, grade 9s. For week 2, you were required to complete tasks 23 and 24. 23, you are asked to use the balances and totals as given below, as well as the information from the journals of Sterling traders for February 2019, and you had to post to the accounts that are given. And then you had the following balances and totals. Firstly, grade 9s, you need to be able to know the classifications of accounts. Is it an asset? Is it an owner's equity account? Or is it a liability account? All right. Remember, assets increase on your debit side and they decrease on my credit side. Owner's equity increases on the credit side and then it decreases on your debit side. The same with your liabilities. Remember, bank is an asset. Debtors control is an asset. Trading inventory is an asset. Capital is owner's equity. Cost of sales is owner's equity. Loan is a liability. Drawings is an owner's equity account. And sales is owner's equity. Please note, I have given you the dead click rule where we debit things and credit things. So dead click, DEADCLIC. We debit our expenses. We debit assets when they increase. We debit drawings. We credit liabilities. Every time I take on a loan, it will increase on the credit side. Then we decredit incomes and capital. All right. Okay, so remember with assets, they increase on the debit side. As soon as they decrease, you will make the entry on your credit side. The same with liabilities, they increase on the credit side. As soon as they decrease, you'll make the entry on your debit side. The accounts that I have not circled is all owner's equity accounts. Please note that owner's equity decreases on your debit side. So if it's an expense, it's decreasing owner's equity. When the owner withdraws, it's decreasing owner's equity on the debit side. When we are making a sale, when we get in incomes, it is increasing on owner's equity side, credit side. Your capital, when the owner puts money into the business, it's increasing on your credit side. All right, please note. Then we had cash receipts journal. We had the creditors journal. We had the cash payments journal. And we then also had the debtors allowances journal. What type of journals are we dealing with? Your cash receipts journal is all about us receiving money. It's all about the incomes of the business. Debtors journal is all about selling goods on credit. Cash payments journal is cash payments made by the business. Debtors allowances journal is when a debtor is not happy with the quality of the goods that we sold to them on credit and therefore they bring it back. Okay? Debtors control, as I said, is an asset account. Assets increase on the debit side and they decrease on your credit side. Did we have a balance brought down for debtors control? Yes, we did. It was 95,621, meaning there were debtors who we sold to on credit and all of them added together is worth 95,621 Rand. I write the 1st of February because that's the beginning of the month. Balance brought down 95,621. I'm going to go through these 4 journals that they have given me and I'm going to see, okay, have I sold more on credit? Has my debtors paid me? So I'm looking at journal number 1 and I see that I've got debtors. Okay, clearly I received money from them, which means some of my debtors have paid me cash. What is happening? My debtors control is decreasing. They paid me and no longer owe me for that goods that they bought on credit. My details will be bank because it was a cash transaction. Which journal did we take it from? My CRJ. And how much was it worth? 49,400 Rand. I then go on to my debtors journal. Did I sell goods for credit? Yes, I did. I sold goods worth 67,500 Rand. My details will be the 28th. My date will be the 28th of Feb. Sales is the details. Which journal did we take it from? The DJ, and it was worth 67,500. Okay. Do I have anything to do with debtors in the cash payments journal? No, I do not. Then I move on to the next and last journal, the debtors allowances journal. Did any debtors bring back goods? Yes, they did. Do you see debtors allowances? Do they owe us now for this amount of money? No, they do not. So debtors control is decreasing. My details will be debtors allowances. Which journal did we take it from? The DAJ, and I write the correct amount of 10,125 Rand down. What do I do now, grade 9s? I will then balance the account out. I will figure out which side is the bigger side. Is it the debit or the credit side? And you will find that your debit side is more than your credit side. So you'll take it over to your credit side, write the very same amount down here, and you will subtract the smaller amounts, the debtors allowances and the bank receipt. Alright, it will give us a difference which is known as the balance carried down, and the difference is 103,596 Rand. I'll then carry this down to the previous month, and you can see that assets is still in a positive, meaning that we still have debtors outstanding on the 1st of March balance that was brought down from the previous month, 103,596 Rand. Trading inventory is also an asset account. Every time I purchase stock, it will increase on the debit side. Every time I sell stock, it will decrease on your credit side. Did we have a balance brought down for trading inventory? Yes, we did have. It was worth 101,520. I write on the 1st of Feb, balance brought down, I had trading inventory worth 101,520 Rand. Now I'm going to look at my journals, the 4 journals that they have given me. Did I sell goods using cash? Yes, I did. There's my cost of sales. Trading inventory has left the building worth 39,000. So my trading inventory decreased. Your details will be cost of sales. Which journal did we take it from? The CRJ, and it was worth 39,000 Rand. Moving along, did you sell goods on credit? Yes, we did. And the cost of those goods that went out was worth 50,000. It left the business. Your details is cost of sales. Which journal did we take it from? The DJ, and it was worth 50,000 Rand to the business. Did we purchase more trading inventory? Yes, we did. Can you see here? We purchased more trading inventory. How will I get that figure? I'll base it from my bank. 140, subtract 12,000, subtract packing material of 15,000, subtract the loan of 18,000, subtract 31,000 Rand, and it will give you a trading inventory figure. Alright, that trading inventory figure is 64,000 Rand. Remember, we made a payment, we paid for trading inventory, and I'm bringing trading inventory back to the business, so my assets are increasing. How did I make this purchase? I made it using cash, so my details will be bank. Which journal did I take it from, grade 9s? My CPJ. How much was it worth? 64,000 Rand. Alright, moving along to the next journal. Debtors allowances, when a debtor is not happy with what we have sold to them on credit. As you can see, the cost of sale amount is unknown. What do we have to do? Work out the markup. Remember, your markup is markup equals selling price subtract cost price over cost price times 100 Rand. All right. Did I have a selling price? They didn't give it to us. They didn't also give us our markup. So how am I able to work it out? I'm going to go to where I sold on credit. Sales minus cost of sales will give me my profit over cost of sales. All right. So let us go and work this out. So the sales is 67,500. 67,500 minus 50,000 divided by 50,000 times 100. Our markup is 35%. Now that I have my markup, I can work out cost of sales. Remember that your cost of sales formula is cost price equals selling price times 100 over 100 plus the markup. The selling price is 67,500 times 100 over 135. Let us go and work that out. 67,500 times 100 divided by 135, and our cost of sales is 50,000 Rand. Now that we have that, we can go and put it down there. As you can see, my cost of sales is 50,000 Rand, which is correct over there. Now you can work out what is the cost of sales for your debtors allowances. Sales worth 10,125 was brought back. 10,125 times 100 divided by 135. 7,500 is what was worth to the business. There's my cost of sales, DHA 7,500 Rand. I then move over to the bank account. Bank account is also an asset. It increases on the debit side and decreases on your credit side. Did we have a balance brought down for bank? Yes, we did. 95,620. 1st of February, balance brought down 95,620. Again, when assets increase, it goes on the debit side. The total of your cash receipts journal is worth 182,700 Rand. I added everything up in order to get the total of my CRJ. You will exclude the cost of sales because that is what the business actually purchased the stock for, and it's just put into the CRJ to know the cost of sales at the point of the sale. All right, you add it up, you should get 182,700 Rand. Move on to your credit side. Our cash total payments was worth 140,000. There it is. CPJ 140,000. You will then work out the account by balancing it. Which side is the bigger side? Clearly our debit side was bigger, and we're now balancing the account, subtracting the smaller amount of 140, which gave us a balance carry down of 138,320. So on the 1st of the month, which is March, I started out my bank with 138,320 Rand. Drawings, what do I do with drawings? We debit drawings. Did we have a opening balance? Yes, we did. Balance brought down 27,100. Did the owner withdraw in the month? Yes, he did. 12,000 Rand. 28th, it's a cash, so it's affecting bank CPJ 12,000, and you tally that up. Simple, easy. Moving along, a loan is a liability. Did we have a balance brought down? Yes, we did. 21,900. Balance brought down. Did we pay our loan in our CPJ? Yes, we did. We paid a loan worth 18,000. Did we receive a loan? Yes, we did. 5,650. So remember, loan is a liability. When we pay our loans, it will decrease on the debit side. When you take more on credit, then it will increase on the credit side. So as you can see, on the 15th of Feb, we paid our loan, bank CPJ 55650, and then on the 28th I paid, we took more on credit there, and on the 28th we then paid 18,000. You then balance your account out. Sales is an income. We are now in the nominal account section, so your opening totals will be viewed at total brought forward. We had a total brought forward of 89,262. I sold on cash. The sales amount was 52,650. I sold using credit. My details is debtors control. Which journal did we take it from? The DJ, and it was worth 67,500. Tally the amounts up. Debtors allowances. People brought back goods. It's an expense. It's from the sales. Which journal? DHA, and it's 10,125. Cost of sales, we had a total brought forward of 66,120. We then purchased trading stock. Remember, it's an expense, so we purchased worth 39,000 using cash and 50,000 on credit. And remember, we reversed the debtors allowances, 7,500 rand. Moving along to activity 24, look at the sales account. It appears in the general ledger of Willem's shop, and answer the following questions. What is the contra account at A? Because it's a CRJ, I know that it is cash receipts journal, and your details is bank because it affects bank. Cash transactions affect bank. What is the contra account at B? It's from the DJ. I know that the DJ is a credit when I sell on credit, and therefore it will be debtors control. What does the amount at C represent? The opening balance brought down from the previous month. What does the amount at D represent? Cash sales. What does the amount at E represent? Credit sales. Which account will be debited to cancel sales? You can debit your debtors allowances. And then, why are we not allowed to record the cost of sales of damaged trading inventory in the debtors allowances journal? The trading stock is damaged and cannot be resold. Moving along to week 3's activity. Remember, when it comes to a trial balance, the trial balance needs to balance at the end of the actual activity. Your balance sheet is concerned with assets, owner's equity, and liabilities. What types of owner's equity? Drawings and capital. The nominal account section is concerned with incomes and expenses. Alright, and remember which side you should debit and credit. Expenses are debited, assets are debited, drawings are debited, liabilities are credited, incomes are credited, and your capital is credited. So what you're going to do for activity 3 and activity 33 and 34, you're going to classify these accounts first to know if you are going to be debiting it or crediting it. So land and buildings is an asset, rent income, capital is a capital. What do we do with capital? We credit capital. Petty cash is an asset. Bank is an asset. Cost of sales is an expense, and that is how you will go along. Do you see that bank is unknown? You will have to just put bank, as you see, bank in the balance sheet, and leave it open until you actually have the amounts at the bottom to be able to work back. Alright, grade 9s. This is your trial balance. You're going to list all these accounts down: land and buildings, rent income, but remember to stipulate it at the correct section. Alright. Then once you have that, you will put it down at the relevant side, debit or credit, and remember your trial balance needs to balance at the end. Thank you, grade 9s.